the Fed says something today where markets say, oh man, they're going to stop their QT or whatever they're doing, and silver's going to rocket because it's going to have to price in all this like money in circulation expansion once again, and then so we're close, Andrew. Either we crash or everything gets subdued and silver moves up from here.
And could you delve into silver, especially today, as we now have obviously a very counterintuitive short-term move, basically into very close to 22 today, and as you talk about the ratio trade, I mean almost 84 in this last 3 weeks into this selling. So it'd be interesting just to see your take on that, please, Patrick.
Well, okay, so if I could just set the stage just with the big picture chart of silver. Here is the monthly chart for silver. I did the same exercise I did with gold, distance from that 16-year moving average. Look, these lines, they got so stretched in the 1980s, they're 880% above that 16-year moving average. But look historically right now where it is. It's so close to that 16-year moving average, guys. It's right below us. We blew here, March Madness, silver blew up above that 16-year moving average, and now it's pole, flag, and it's getting really close to that 16-year moving average. And in an uptrend, silver has even shown that it doesn't like staying too close. Here in 2005, that's the closest it got. So we could feel that pressure of that 16-year moving average repulsing silver up like a beach ball. You can't keep under the water. You try, it's just going to shoot it up super violently. So from a risk to reward profile, this is as low as it gets. $20, $15 silver, anything below 25. It's historically cheap, right? That long-term moving average is just coming to push it up. So don't wait, guys, until you're super stretched. If you had a chance to load up, these 10, 20 years opportunities, these are the opportunities to load up. So if I could circle back, why silver is going, silver is like a financial metal. So the gold to silver ratio is essentially telling you if there's going to be a risk off, risk on event. It has, sometimes I have a feeling it has practically nothing to do with what silver is or gold is. It's just the markets, the capital flows going more into gold and less into silver when they think the US equities are going to get sold off hard. Here is March Madness. Now this is March 2008. See, the gold silver ratio shoots up. So gold is holding pretty strong, but silver got hit a lot harder. So people are leaving silver, they're going to gold or the US dollar. Here's March Madness, a spike up. So what's been happening now is the risk, the gold silver ratio is telling me we're at risk. As long as this crescendos upwards, at any moment we could have a violent, like, oh my God, like US equities go down 10, 15%, silver gets sold off. But this is temporary and should be seen as eventual fuel, because eventually wherever this gold silver ratio is, this will be wherever it because eventually they're going to print so much more money, or the real macro tidal waves are going to come in, and these are going to create opportunities where wherever, if silver breaks out here, the gold silver ratio goes up here, then this will create an opportunity to fuel silver on the way down, because you don't want to buy silver when the gold silver ratio is down here at 32. It's that's when everybody's talking about silver, but it's going to want to revert to mean, right? Based on a historic, pattern. So that's pretty much my take on silver right now. Weakness in silver has nothing to do with silver. I think it just has to do with potential liquidity event. And if there's no market crash, Andrew, then from here this is just a bear flag. So pull, the flag's going up, and then it's going to go back down here. Just like here, this is, for a long time I thought this is what we were building out here. The GFC crisis goes down sideways, and then was the melt up in silver from 2010 to 2011. So if this wedge, we have to keep a close eye on it. Either we crescendo up and it's end of the world, or the Fed says something today where markets say, oh man, they're going to stop their QT or whatever they're doing, and silver's going to rocket because it's going to have to price in all this like money in circulation expansion once again, and then. So we're close, Andrew. Either we crash or everything gets subdued and silver moves up from here. But it's just so cheap historically. Like, Jesus, man, it's just cheap historically. It's hard to put in other words.